Hey everyone, welcome back to the Conk Economist. Today I'm continuing our series on buying a home in 2026. And today we're going to concentrate on you, getting you ready to buy a home, getting you ready to make that offer. We'll be talking about several points today, and the first one I want to mention to you is start with Fannie Mae, fanniemae.com. Fannie Mae is an acronym or a cliche, I guess I should say, for the Federal National Mortgage Association that has a multitude of information that you can use. It will explain different kinds of mortgages with different rates of down payment, anywhere from 3% down to 20% down, fixed rate mortgages, variable rate mortgages. Just a lot of good information, and I urge you to start your preparation with that. One of the things they're going to be talking about there is how to improve your credit. And this is extremely important. You're going to need a credit rating of about 620 or higher, depending upon the lender. And for every dollar that you spend on some type of installment loan or some type of credit card is a dollar less that can be allocated toward your mortgage. And lenders will take this into consideration. So we need to work hard to get that credit card higher. Now, there is a projection out that millions of people this year will receive tax refunds higher than normal. And if you happen to be included in this group, use that tax refund to help improve your credit. Pay down credit cards or pay off installment loans, because every dollar that you can improve on your monthly outlay in terms of installment loans is a dollar more that can now be allocated to a mortgage. And lenders are going to take that into consideration. For example, a $500 a month car payment, say 7%, 7 years, that will produce that will support a loan of about $33,000. But that same $500 a month at 6% over 30 years will support a mortgage of about $84,000. So just think about it. If you didn't have that car payment of $500 a month or whatever it is, you can prorate it. If the car payment's $250, then you can cut this in half. If it's $750, then you can increase it. But every dollar that's not going for a car payment is a dollar that can go for a mortgage payment and will enable you to buy a better home. So use any bonuses, use any tax refunds to pay off that car loan. Don't buy a car now, or don't buy the boat now. Wait, that can come later. Concentrate now on buying the house and getting your credit in good shape. Get a copy of your credit report from one of the credit reporting agencies such as TransUnion or Experian or Equifax. You're entitled by law to get at least one free report a year. So do so. Find out where your credit is. If there's any errors on that, get them corrected, because you want the strongest credit report that you can get. And you want to get above that 620 threshold rate. Some lenders do require a higher amount. So we want to improve on the credit rating. It's a good idea to shop lenders. Find out now how much you can buy, because we want you to go into that negotiation with the seller. We want you to be strong, be financially strong, ready, willing, and able to perform and to close quickly. And so if you are sure of where you stand, and maybe you can get a commitment letter from the lender to show you how much you've been approved for in terms of a loan. This will go a long way toward establishing your position as a really strong, ready, willing, and able buyer. And that's what you want, because if you're going to be, as I've suggested, find a seller who is anxious to sell, who is desperate to sell, then you're going to come along, and I want you to be in a position of being that seller's dream buyer. I mean, here's what he's been looking for: somebody who wants this house and who is ready, willing, and able to buy this house. And so it's important that you do a little spade work in advance and speak to maybe at least two lenders, if not more, but find out what are their rates. You're shopping for money, and this is like shopping for a car. Not all lenders are the same. They don't have the same cost necessarily. They can vary a little bit on what their requirements in terms of credit rating, in terms of interest rates. So shop and find out exactly where you're at. Now, you've got to be careful about having them check your credit, because the more times your credit is checked by a lender, the worse your credit gets, believe it or not. Checking your credit by lenders actually lowers your credit score. So this is why it's good if you can find out in advance what your credit rating is, so you can show that to the lender. And if you're going to have your credit checked, bunch them together, because it won't have quite the negative impact if the credit checks are all within a short period of time, as opposed to spread out over a period of time. Mortgage interest rates are now lower than they have been last year or 2 years ago. Right now, the last I checked, they were about 6.1%. They change almost daily, but they follow very close the 5-year bond, the 10-year bond, and I've talked about this before. And the 10-year bond, of course, is lower now than it was a year ago or 2 years ago. Also, recently, President Trump directed the Fannie Mae and Freddie Mac to buy $200 billion of mortgage bonds, and I've explained about those in also previous reports, but that has helped to push down the yields on mortgages, and so that has also contributed to lower mortgage rates. In fact, right after he made that announcement, they hit 6%. They've come up a little bit since then, but there are projections for rates to possibly dip into the 5% level this year. Which would help. But what's important is for you to check with different lenders, find out what they are charging, what you can be qualified for, and to improve your credit report. This is extremely important. That concludes our segment today on buying a home in 2026, concentrating on you, getting you ready, getting you established in terms of what you can borrow, and improving your credit report, which are going to be very critical in your negotiations and buying that new home. Next time, we'll be looking at how to make offers on the properties that you are interested in. And I'll even give you some guidelines and maybe a formula that you can use to help guide you in how much should you offer for a home. Thanks for tuning in. Hope you can subscribe and push that like button, and we'll see you next time.